Hello everyone, Andrew here from NFX Trading Academy. In this video we're gonna talk a little bit about market structure. Market structure is one of the most important concepts when it comes to trading the financial markets, especially the forex market. Wanted to do a couple videos on market structure because I've seen a lot of people not really understand how to correctly mark their market structure on bigger time frames as well as lower time frames, and also they do not understand the difference between the internal structure and external structure. So let's just get into this video. Let's talk about the basic market structure. So anyone who wants to start making money from the financial markets, from the forex markets, they do need to know these basic concepts. We have two types of structure, which I personally call them bearish and bullish order flow. Order flow, as you probably know, is the flow of orders in the market at a certain time frame, so it can either be bullish for buys or bearish for sells. Pretty easy. Here on the left side we have the bullish order flow, which is pretty basic. We mark this by breaks of structure. If you don't know what a break of structure is, I do have a separate video on this alone. So a break of structure is when we create a new high or a new low in the specific market type. Here, for example, we have a bullish order flow. So once we create a new higher high, that means that we created a break of structure right there, a new break of structure right here, creating a new higher high, a new break of structure, creating a new higher high. It's pretty easy. Then on the right side we have the bearish order flow, which is basically the same thing but reversed. Once we create a new lower low, once we create a new low in the market, then we create a break of structure, and so on as we create new lower lows. After a break of structure and a new lower low, we usually have a pullback which creates a lower high. So this is why it's called a lower high, because it is under the previous lower high. So it's lower, but it's also a high in the specific market. Same thing on the left side. Once we create a new higher high, we usually have a pullback, creating a new higher low, which is higher than the previous higher low, then creating a new higher high and a new break of structure. It's really basic market structure. So this is not the hard thing. The hard thing is understanding the difference between the external and internal order flow. I'm going to explain a little bit about trend changes and changes of character. So now I want to talk a little bit about trend changes and changes of character. So trend change is when a strong swing structure is broken. So that means we go from a bullish market to a bearish market once we break a strong swing structure. A strong swing structure can mean structure on the 4-hour, daily, or even weekly and monthly. That is why it's called swing, because it's on the higher time frames. But once we change the structure on the higher time frames, then usually the smaller time frames will follow. Once the swing structure switches, then it will give us much more opportunities to take trades in the other direction of the market. Then we go over to the change of character, which basically means that bullish structure in this example is changing to bearish structure or vice versa. So a change of character is exactly that. Once we break the bullish swing structure and we turn it into bearish by breaking that specific structure, then we have a change of character. This works on any time frame, but now we're just talking specifically about the swing structure. So in this example right here, we have new higher highs being printed in the market. So we have a bullish order flow, a bullish market, a bullish structure, create a break of structure, a new higher high, a new higher high, another break of structure. And this is where it becomes interesting, because we do create a new higher high with a break of structure, but then we break past the previous higher low. So you see how here all the higher lows were respected. In this case, the higher low was not respected and it created a new lower low. What that means is that we had a trend change and we had a change of character, because the bullish structure has changed to a bearish structure once we put a new low in the market. Now what we can expect is to have a small pullback, creating a lower high that's lower than the previous high right here, because pay attention, if market did create a new high above this higher high, then this was just a liquidity grab, a fake out, and then price continued bullish. So it is really important to see the lower high being formed and then potentially a new break of structure, just to confirm that the trend has changed 100%. This usually works better on the higher time frames, just to confirm the trend. Moving on to internal change of character. An internal change of character means usually on the time frames that's less than the 4-hour. So when I'm talking internal change of character, I can mean 1 minute all the way to 1 hour, 2 hours, 3 hours, and 4 hour we usually keep it for the swing structure. But so this is the higher time frame structure. We have a higher low, creating a new higher high right here, creating a new higher low, creating a new higher high. just pay attention, this is our previous higher low and this is our higher high. That is why it's marked with a blue. And then this is the higher low. So you can see how the external structure, the higher time frame structure, the swing structure is still bullish, but inside this we can have an internal change of character on the smaller time frames. When you have an internal change of character on the smaller time frames, it usually means that we are in the pullback phase on the higher time frame. So if this is our higher low, we just created a new higher high, making this break of structure. So now we are watching for internal changes of characters on lower time frames in order to confirm the pullback and potentially take a counter trend trade to aim for that higher low to be created. So then we can take buys to create the new higher high. It's pretty simple. So if we are watching, for example, the 4-hour structure, then we can watch for 50-minute changes of character on 1 hour. So once we have a change of character, we can potentially sell it until we have another bullish change of character, which confirms that a new higher low has been set on that higher time frame. Once we have another bullish change of character, it signals that swing pullback may be over and swing run has begun. What this means is once structure has realigned bullish after creating the higher low, then we can start taking buys, which are pro-10, to aim for a new high to be created in the market, making this break of structure. This is pretty easy. Now let's talk about multi-time frame analysis. Multi-time frame analysis, it means that basically we are analyzing multiple time frames charts together, so we can have a clear direction in the market. That means we can go for daily, 4-hour, 1 hour and 15 minutes. So we can identify which trades are pro trend and which trades are counter trend. So let's take an example right here. A run on a higher time frame is a trend on lower time frame. So that means once we create a structure on the higher time frame, that usually creates a trend on the lower time frame. So with the black lines we have the higher time frame structure, and with the blue lines we have the lower time frame structure. So let's pay attention at first at the black lines. We have the higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and this is where our structure shifts and we go into a bearish trend because we have created a change of character right here. So now we put a new lower low and then creating a lower high right here. So we create a new lower low right here, creating a new lower high, lower low, and lower high, lower low right here. So this is why we look at the lower time frames, because lower time frames allows us to take trades even if the higher time frames is against the lower time frame trend. So let's take a look right here. You can see how the higher time frame just is pushing higher. So this is the higher low. Lower time frame structure is just bullish, nothing happens. But once we create that higher high and lower time frame indicates that we may have a pullback, then we can potentially sell from here, for example, all the way to here. And then once our higher low is confirmed by creating another bullish change of character right here, then we can potentially expect a new break of structure on the higher time frame. Same here, you can see how once we create the higher high, lower time frame structure shift is to create that pullback on the higher time frame, which allows us to potentially take some sells in this area before waiting for lower time frame to align to continue the bullish structure. It's really important to understand all the structure on all the time frames, because usually the lower time frames indicate the first signs of a move. So once you understand how to look at lower time frame, you can potentially expect higher time frames to follow. So if you see a bearish change of character on the lower time frame in a bullish market on the higher time frame, you can expect to have a pullback phase on that higher time frame, so you can take counter trend trades, for example in this case sells, and once you see lower time frame aligning bullish again or the flow turning bullish again, then you can take pro trend buys because you have the higher time frame structure behind you that can help you take those nice buys and potentially create a new break of structure and a bigger move, because usually continuation trades, especially with the higher time frame, they move a lot more faster and just more clean. Same here, you can see the lower time frame just bullish, and then we have a small switch right here, but then price immediately aligns bullish again, creating a new higher high. And this is why I'm saying that once you identify the lower time frame here, for example, once you see lower time frames being shifted to sells, you can take potential sells right here. And then once you see the higher time frame being shifted, once you have a change of character, then you know that you can potentially swing this position all the way down until the higher time frame structure aligns bullish again. I hope this makes a lot of sense for you guys. It's pretty simple. In this phase, you can also see how price on the lower time frame aligns bullish again to have that pullback on the higher time frame, and then aligns bearish again for pro trend sales before going again bullish and again selling. So it's pretty easy. This is a more complex approach where we analyze the daily, 4-hour, 50-minute, and also the 1 minute. We did that just so you can understand better how the lower time frame works. So you can see the daily time frame is just these two big lines right here, which is just a big bullish move, which inside has the 4-hour structure, which goes exactly like this. You can see it's pretty easy. Inside that we have the 50-minute structure, which we talked about in the previous slide, and then just looking at the 1-minute structure, you can see we have a scaled in right here on this specific move. We have the 1-minute chart as well, which can also indicate a change of character on the bigger time frame. So the reason why we use the 1 minute is because it's the first time frame that can indicate a potential reversal. Once you understand how to use it and use it in the specific times that reversal can happen, it can be a really powerful tool to have amazing risk reward trades. That's how we take 1 to 5, 1 to 10 trades every single day, just because we understand the lower time frame all the way to 1 minute, but we keep in mind that the higher time frame structure dictates what price is gonna do on the long run. So here we just have the 50-minute structure, which also you can see when 50-minute structure shifts bearish, usually the 1-minute structure shifts before. So you have the 1-minute shift where you can take sells from, and then once you see the 50-minute confirmation, you can expect another pullback on the 50-minute, where again you can wait for the 1-minute alignment to take some more sells, and the same thing once it aligns bullish again. Multi-time frame market structure is really powerful. It's really important to understand, because you can trade from the 1 minute, but you can target the higher time frames structure, so that just gives you an amazing return on investment on your trades. So this was just the first part of the presentation of market structure. Stay tuned for another video where I'm gonna show some examples on the charts as well, just so you can understand it better. But if you enjoyed this video, don't forget to like it, subscribe, and also leave a comment down below, and join the free Telegram group where I post charts almost every single day of what moves I'm expecting. It's completely free, so I'll see you there. Thanks for watching, and stay tuned for the next video.